Recent coalition between a Nigerian publication known as This Day and a leading investment company known as BGL PLC saw the two entities launch a top 50 index for Nigeria's listed equities. Joining us now from Nigeria is Tamunoye Alazigha, who's the head of strategy at BGL. Tamunoye, thanks very much for coming through. Talk to us about why the timing is ripe for creating a top 50 index.
Oh, hello, good afternoon. Thanks for having me. First of all, the 50 index was set up to be the leading indicator for Nigerian equities, and it's really to reflect the risk and return futures of the capital markets, the equity markets on a regular basis. Now, what we had hoped to achieve, starting out with this index, is going to be part of a family of indexes that we're going to roll out over the next year or so that have several attributes. I think the first I'd like to touch on really is that it's an intelligent index, different from the other indexes that have been put there that are sector-based or that just sort of focused on the market. Difference in this being that it has a slightly less than 1 beta and an alpha component, which means it has a return per unit of risk as, if you're investing in markets. So it could become, in the long run, an investment instrument in itself, sort of like the spiders, that mimic the S&P in the United States. We also hope that this index can serve as a bellwether for the general economy, the general performance of the Nigerian economy, as well as serve, as a monitor or compare the benchmark to compare against the general performance of portfolios and the market itself. Now, in terms of asset allocation, this is sort of representative of the equity space. And so if you want to make a play on a passive basis, so something that gives you more bang for each unit of risk that you take, that you might be better on mimicking this index from a passive investment perspective.
All right, now who are you targeting with this index, Tamunoye? I know that obviously there's a clamor for new retail investors, prospective foreign investors.
It's going to be for both. It's going to be for institutional, retail, local and international, because, first of all, we want to get comfortable with tracking the markets intelligently, where we sort of take away some of the noise components of the general market. Just a point of reference here, this index actually captures sort of like 85 to 90% of the general market itself. And it also has that kind of a similar type of distribution of the market itself, where we have, from a sector perspective, we have sort of like 30% of the index for the banking sector, 8% for hotel and 14% for food and beverages. So it's a nice mix, that gives sort of like the market, but, not as noisy as the market in itself. So it's more medium to longer term kind of indicator than, a day-to-day indicator of the general market index itself is.
Now, you're also giving us a sense of the sort of composition that the index will work off of. But here's the concern, is that the Nigerian all-share index is dominated by the banks. They are the largest constituent. But also in terms of capitalization, one company dominates, and that's Dangote Cement. So how dynamic will a top 40 index really be?
Oh, that's very interesting. Yes, in our considerations for index membership, we sort of picked up 6 different criteria that we focus on. Market capitalization certainly is one of them, and we require a minimum of over 5 billion market cap. But we also look at things that sort of position ourselves around the public float of the company. So, 25% of that company has to be tradable. Of the issued stock. It has to have great financial viability. That means over a period of time that it has shown consecutive performance over the last 3 quarters or so, or 4 quarters in the real sector. It must have that level of liquidity and a sector representation that is sort of representing the general market in itself. And so you're not missing out. Yes, banking sort of dominates, but, we only have that many stocks in the market, listed stocks in the market, and so it's still going to be skewed, but not as skewed as the general market itself.
Okay, I'm going to bring in our guest host here. His name is Frank Blackmore. Frank, what do you make of Nigeria introducing a top 40 index?
Well, I think it is beneficial, and as we've heard tonight, it acts for it's a good general indicator of the health of the Nigerian economy. If you want to look at one number to reflect, has it grown this month? Has it not grown this month? We look at indices, and as mentioned before, it's also something to benchmark against. If I'm an asset manager, I probably want to outperform such an index, because that would, especially with a beta less than 1, that would represent a low level of risk against which I can do so.
I mean, what we are seeing in Nigeria as well is the rise of the pension funds in Nigeria. He did refer to the fact that it's also for institutional investors, and with more people directing their savings and retirement savings through pension funds, which now are going to constitute something like 40% of the sort of liquidity flow that you see in that market. How is it going to help some of those people?
Well, it gives them towards, I suppose, the short, medium-term end of the market, the ability to buy another asset on their books, an asset that is not as volatile as any single asset of which it is composed, and that flexibility is always good for a market. Yeah.
Okay. Tamunoye, let's talk about the sort of research you're going to be offering, because some market indices not just providing technical analysis as to how the market is performing over a period of time, but it's also helping prospective investors understand a company, its profile, threats of bankruptcy, those sorts of issues.
Yes, we're going to be picking corporate action, so we're going to be analyzing, I mean, if any comes on a basis from the membership of the index. We're also going to be showcasing out of the index each week a company that we want to look at the numbers and for all the commentary, analysis, and analytics, to sort of do the projections, balance sheets, and review the industry in which they performed in, and, make suggestions and forecasts going forward of how that particular sector and company will perform within that sector.
I mean, in terms of the speed with which you're going to be providing some of the information, particularly information on prices, on ratios, in a market like Nigeria, how are you going to be getting that information out timely?
We've done so well up until then. I mean, it was launched 1st of January. We're going to be providing that information on 3 different platforms. One would be print media in the This Day newspaper, and 2 other online platforms would be the BGL PLC website as well as the This Day Live website, where we're going to be featuring blogs and other commentary and feedback from both investors and managers that hope to mimic that index. Analysis and projections and all that comes with any world-class index.
Now, let's talk about a thorny issue here, and this is the objectivity of the index. Ultimately, people need to know that what information is being provided is generic information. It's not a case of what BGL prefers by way of sector or asset class or whatever the case may be. And I'm going to just point you here to the whole allegations of collusion between Lehman Brothers and stockbrokers in the United States. How are you going to guard against that sort of bias for the reader?
Absolutely. That's a great question. And if you look at, I mean, it's going to be out in the publications and it's all on the different web platforms what the index methodology is. It's very clear that there's no sway or any bias absolutely in any direction in terms of pushing stocks or making, a buck here and there in terms of commissions. No, this is a very objective index that the entry and exit criteria are clearly spelled out, and they're going to be monitored by an independent review process or committee that sits every month. And of course, if anything extraordinary happens within the short term, within that period, say delisting or some other corporate action or merger and acquisition or something, the index will adjust automatically to that. So it's not a push in favor of any particular stock. And I would like to reiterate that too, that it's totally independent. We want it to serve as a bellwether. And we also want to create that possibility down the road. Right. People can mimic that index independently, in a very transparent and fluid and very reactive manner.
All right, thanks so much for your time there, Tamunoye Alazigha, who's head of strategy at BGL. Now, Nigeria may be the second largest economy, Frank, in Africa, but its all-share index has been an underperformer in many respects. We know of the market crash in 2009, and we know of very limited returns in the previous year, not anything majorly above 10%. So for anybody wanting to get into this market and wanting to really reap the rewards, can they just rely on this sort of data, or how else can they evaluate prospective growth in the Nigerian market?
Look, I think you're not going to expose yourself to a great degree in the Nigerian market by moving a large amount of your assets into that market. If you do want exposure to the market, however, and the risks you've been talking about have been mitigated, and we do have an objective view here, it's a very good way to invest into the general Nigerian market.